Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders and our website is www.stochastic-magd.com. The title of this video is My Take on the Forex Market. My Take on the Forex Market. No, this is not my strong point, okay? I would like to share with traders, okay, what is happening in the Forex market, how the Forex market is distorted, how the global market is distorted at this point in time. And in this video, we will be talking about the dollar yen as a market indicator, the 2008 financial crisis, the global market, the interest rates, markets addicted to the quantitative easing, the central banks held at a gunpoint, the case of the British sterling pound, fundamental ratio, cycles, and fractal. We will discuss each topic thoroughly, and this is my take on the Forex market. If you are trading, if you are investing in this market, I recommend to you to watch the full length of this video. If you do not understand my accent, pay attention carefully, all right? Because this will help you to navigate through this messy market, all right? First thing first, dollar yen is a market indicator, okay? Crude oil is also a market indicator. Gold is also a market indicator. The market indicators allow market participants to time the market carefully and to make excellent decisions. All right? So most smart traders, smart investors pay attention to the market indicators before they will buy and hold or sell and hold. They will thoroughly analyze the market indicators. As I told you at the beginning of the video, dollar yen is a market indicator, gold is a market indicator, crude oil is also a market indicator. Very often, if the market is distorted, we can see clearly, my apologies traders, we can quickly recognize that the market is distorted if we pay attention, if we analyze the market indicators. As I explained to you, I want traders to be very patient with me and to pay attention to everything that I'm going to say now, because this will help you to make better decisions and to avoid making wrong decisions, especially if you are a big market player. All right? Nearly a year ago, I recorded a video that I posted at www.youtube.com/24ElliottWave at 24ElliottWaves YouTube channel. The title of that video was How to Trade Elliott Wave Like God. I was analyzing the dollar yen. What I said to trade at that time was that the dollar yen, contrary to the general view that the dollar yen was in the third Elliott wave, trader think that this is the third Elliott wave, I was saying to trader that this was an extended first wave, all right? And we are expecting the dollar yen to complete the second wave. Somewhere here, somewhere in this zone, I start saying this to traders, I think somewhere here, and the price continue to go up like this, okay? Nothing wrong with that. But so far, we did not see the second wave. The minimum expectation that we were waiting for was that the dollar yen will pull back to the zone of 9000 on this level here, 9000. It did not touch it. It's very, very worrying. Very, very worrying, because if a market indicator is distorted, you can quickly identify that the market is distorted. We do not have what we call an orderly market, which means financial instruments that are supposed to go up are going down, and financial instruments that are supposed to go up are going down. So financial instruments that are supposed to go up are going down. And very often a lot of investors will put their money on one asset, but later on they will realize that they make a big mistake. When the market is trying to rectify itself, the market is trying to correct itself. It's happening all the time. So in our view, the dollar yen should pull back to the zone of 900. Better, the best place for the dollar to go down, at least, okay, to the level of 8436. Now, the dollar yen is bullish for long term. The market knew it. It's bullish for long term, but it's not yet ready, all right, to start a reliable bullish trend. But before we have a reliable bullish trend, the dollar yen must pull back at least, okay, to the level of 8436, minimum, okay, 9000. It did not happen. Why this is important? In 2008, we have what we call the financial crisis, all right? We know that the Japanese economy was in recession for decades, all right? After the Japanese, we see that the Japanese were the first to go into recession, all right? And then we see United States, we see the recession. And then in Great Britain here, in London, we have also the recession. Now, as the cycle has started first, talking about the 2008 financial crisis, it has started from where? From Japan, and then United States, and then Great Britain. Now we are seeing the consequence of the global recession in Europe, in the other part of the world. As the global financial market went into trouble in 2008, starting from Japan, before a new bullish cycle or a new recovery or a reliable bullish cycle may start, we will see again in Japan, okay, the recovery will start again from Japan, all right, and then it will go to United States, and then it will come to United Kingdom before spreading to the rest of the world. But what is happening now? The market is assuming that the recovery is taking place in United States, and that the recovery will continue. But I can tell you now that it's not going to happen. That's how I know straight away that the market is distorted. The recovery will start from Japan, where the recession has started first, and we will spread to United States before coming to United Kingdom and spreading the world. Now, the mistake that a lot of investors, even the smart investors, are making is that they are assuming that the recovery has started in the United States, which is completely wrong. Looking at this chart here, which is now, this is not an ordinary financial instrument. The dollar yen is a market indicator. All right, this is a market indicator. And if you want to make a smart decision for long term, for medium, even for short term, you must constantly pay attention to the market indicators. The dollar yen has been distorted for some time. In normal condition and in an ordinary market, this dollar yen should pull back minimum 9000, better to the level of 8436. There's nothing wrong with the dollar itself. I'm not bearish against the dollar. The dollar is bullish for long term, but for the bullish momentum to be reliable or sustainable, or for the global economy to recover in a solid ground, okay, the dollar yen must pull back first. It's crazy, but it's happening. The global market, the market is not, okay, it's not fragmented, okay, the market is not segmented, okay. It's not that we have the economy in the United States completely separated from the economy in Japan. The economy in Japan is completely connected to the economy in United States, in United Kingdom, in the whole world. All the economy are connected. But there are some principles that the market is always following because the market is fractal. This is one thing that they must learn at www.dayprotrader.com. A pattern has started, a depression, all right? A recession pattern has started in Japan. That pattern has copied itself and pasted itself in the United States. The same pattern has duplicated itself in United Kingdom, and now we see the pattern in Europe and the rest of the world. What is happening? All right, what is happening? What is happening now, my brothers and sisters? This is the Bank of England pictures here, and this is the Federal Reserve United States. This is the ECB Bank in Frankfurt, and this is the Bank of Japan right here. All right. Going back again to the Federal Reserve, we know that in 2008, okay, from 2009, in fact, okay, up to 2013, the Federal Reserve was busy printing the dollar. This is what we call quantitative easing. It's the devaluation of the currency, creating inflation around the world. Then we see again money printing in Great Britain, the same pattern that we have seen in United States, money printing, same pattern in Great Britain, money printing, all over the world, money printing was going on, all right? It's a pattern, it's a pattern. So the Federal Reserve was printing money, the Bank of England was printing also money, all right? But something else was taking place. Our friend at ECB thought that the market is not global. So they were encouraging investors to come and invest in Europe, that everything is rosy, that the real estate crisis is not in Europe at all. It will not affect the Europe, which is completely wrong because the market is global and connected. So they made a big mistake. Instead of printing money at the same time, like, the Federal Reserve and the Bank of England, they did not. As I told traders before, I joined your channel on YouTube, I told traders that the same pattern as the Federal Reserve and the Bank of England were busy printing money, the ECB at one point will print money. Listen, pay attention carefully. So now the market is expecting the ECB to print the money, but the ECB is not ready to print the money. Why? The ECB is not ready to print the more euro and to start quantitative easing. Going to the next topic, market addicted to quantitative easing. So the market suddenly became drunk or addicted to the quantitative easing because of all the assistance that the Federal Reserve or the central bank were giving to major financial institutions in the world. So the market is addicted, the major financial market players are addicted right now to quantitative easing. So the Federal Reserve suddenly decided to stop quantitative easing when the market in fact was not ready to stop quantitative easing. They need more. They were drunk. They were addicted to it. They want more. But the Federal Reserve said no. Now, the pressure is now on the ECB to print more money and to start quantitative easing. But they can't do it. Why they can't do it? They cannot do it. Look here. They cannot, the ECB will not start quantitative easing if the dollar yen, does not pull back. This is how we know that the market is distorted. As soon as, pay attention, as soon as the dollar yen pull back, at least to a level of 900 or best at 843 zone, you will see. Pay attention, this will allow you to make better decisions in the future. When you see at one point, the dollar yen may continue to go up for some time, but if at one point you see the dollar yen pull back to the level that I've already mentioned to you, be ready and expect, the ECB to be busy printing more euro. I don't know how this will happen, but this is a pattern that we have observed. So the market is now addicted to the quantitative easing. They want the Eurozone, to start printing more euro, but the ECB does not want to comply. The pressure is on, and this brings us to the next topic, all right? Central banks are held at a gunpoint because the market needs more quantitative easing. At the same time as the market is asking for more quantitative easing, all right, in Great Britain, in Europe, all right, there's something else that was taking place, all right? The market was expecting, all right, the market is expecting the Federal Reserve to put up interest rate in the United States. But they don't want to do it. Why they don't want to do it straight away? Because the recovery is not sound. They know that the recovery is not sound. It's not solid. They don't want to mess up, this, slow recovery. They don't want to mess it up. They know. So at one point they will come out and say that, okay, soon we'll put up the interest rate if the economy condition improve. It's just the same thing. Everybody knows it. If the condition improves, okay, they will put up the interest rate. But this is the message all the time. If the condition improve, we will keep eyes on the real estate, we keep eyes on the economy, blah, blah, blah. And if everything aligns, we'll do exactly the same thing. Another day, they will come out and say exactly the same thing because the economy is not ready. But the market wants interest rates to go up in the United States, all right, and also in Great Britain here. So the central banks are held at gunpoint to put up interest rates. Recently, ladies and gentlemen, we have seen the pound dollar in decline, going down big time. There are other issues talking about the independence of Scotland, all right? If you understand the United Kingdom, all right? Scotland is part of United Kingdom, so they want independence. So that is putting a bearish sentiment on the pound dollar. So the market is busy selling the pound. But that's not the main reason. The reason why the market is busy selling the pound, though we can justify it by the fact that Scotland will become independent if they vote yes for independence in this month, all right? The reason why the market is busy selling the pound is because they want to put pressure on the central bank in Great Britain and also United States to put up the interest rate. But they can't do it. Why they can't do it? Why the central bank cannot put up the interest rate straight away? Because the recovery is not strong. You see what I mean? So the recovery is not strong. Market has been distorted. Things are not aligning very well, but the market did not see the distortion. They created distortion. So they want interest rate to go up. They want ECB to print more euro, more quantitative easing because they are addicted to quantitative easing. Now they want interest rate to go up, but the interest rate cannot go up because we don't have a viable economic environment. What should happen, ladies and gentlemen? What should happen is that the dollar-yen continue its move to the downside to complete the second wave. This brings us to the next topic, fundamental ratio, cycle, and fractal. I said to you that this is not my strong point. I will try my best, okay, to put this point forward to you, and I'll leave it to you to think of it, and this will allow you to make excellent decision. And it may take some time, but when it starts happening, you can, okay, refer back to the video and make smart decisions. I want you to pay attention carefully to what I'm going to say here. Fundamental ratio, okay, are sound at the point when a bearish cycle is about to begin. Let me say this again to you. Fundamental ratio are sound or solid at the point when a bearish cycle is about to begin. All right? The next point I want you to remember is that fundamentals, okay, are very, very weak, okay, at the point when a bullish cycle is about to begin. Let me explain myself to you. So very often, like we see in 2007, which has caught a lot of hedge funds and big institutions that are using fundamental ratios. So they will go up, for instance, and go to Google Finance. They will check the fundamentals, okay? They will say, oh, right, okay, the book value is quite good, okay? The current price below the book value. The market environment is great. They will check the fundamental, and nothing. The fundamental ratio are lagging indicators. They are lagging indicators. So at the point when the bearish cycle is about to begin, everything looks rosy. The fundamental will not dictate that a bearish cycle is about to begin. So investors, okay, are looking at the book, they're looking at the, okay, the balance sheet, the cash flow, everything looks rosy. But at that point, they want to invest. They just want to buy. They want to buy and hold. They want to buy and hold. But they forget something. There's something else that the smartest market participants are using. This is what we call market cycles. Again, pay attention. There are different types of market cycles. There are mini cycles within a bigger cycle. For traders who understand Elliott wave, there is what we call an Elliott wave cycle. The Elliott wave cycle is formed of the multi-wave and the corrective phase. When the price will go up 1, 2, 3, 4, 5 waves, and it goes down 1, 2, 3. Different type of correction, but the whole cycle is formed of the trending phase and the corrective phase, either in the uptrend or a downtrend. This is true. It's happening all the time. And when these cycle traders know that the cycle is coming to the end, they don't wait for the fundamental ratios. Though the fundamental ratios are solid at that point in time, the cycle traders or market participants, investors that understand the market cycle will start selling slowly, will be divesting. They will be taking money out of the market, out of that asset, out of that sector. But at that point in time, the general public and traders and investors who do not understand market cycle will be busy buying because the fundamentals are sound, which is a big mistake. This is bringing us to the point where I need to mention to traders that in order to make a smart decision, one must learn to understand market cycles. When a market cycle is distorted, as we have seen here, so this is talking about Elliott wave here, we are expecting the second wave, and all we see is all kind of blah, blah, blah. Sometimes, or what is happening, the funniest distortion takes place when we have what we call a flat correction. So price goes up like this, okay, and pull back, okay, here. So there was a trending period for a long time, price pull back like this. People say this is an invitation to buy, okay? Price start buying, price goes up again, display a new high. Though the price, at this point in time, everybody is very, very bullish, a bearish cycle has begun, and the price will come down big time. Traders who understand the cycle, at this point in time, will come out. Same thing will happen if you're in a downtrend. So price goes down like this, and then there is a small rally like this. People say that, okay, this is an invitation to sell more. It's still bearish. Because why it's still bearish? The fundamentals are still weak. But remember, the fundamentals are very, very weak at the point where, okay, the market is about to become bullish. Fundamentals are weak at the point where a bullish cycle is about to begin. The same thing is true when we talk about volatility. The volatility is very, very high, okay, very, very high at the point when the market is about to change direction. Because of the excitement, all right, same thing. Either in the uptrend or the downtrend, the volatility will be quite high. People will be selling. You see price dropping big time or going up big time. People, that's the excitement. The volatility will be quite high at the point where, okay, the market is about to change direction. The same thing is true when we are talking about the fundamental ratio. So talking about a flat correction, which is another Elliott wave pattern, that those who understand market cycle pay attention to, is the price goes down and then rally a little bit, people say, okay, fundamental are weak, let's continue to sell. So they are selling like this. As the price goes down, display a new lower low. People think that, okay, I told you, it's still weak. As everybody was expecting it to go down more, a new cycle, the price start going up big time. Ladies and gentlemen, the cycle, market cycles, do not fool smart investors. So this brings us again to my take on the Forex market, all right? The dollar yen is what we call a market indicators. This allows us to make a smart decision for long term and for medium term, all right? So looking at the dollar yen, as I show you now, all right, we are expecting the dollar yen to pull back a bit. Now, the resistance that we face, or the support that we are facing there, price tried to go down here. You see here, it was trying to come down. It would be nice to come down and complete it completely right here. You see here? But people decided to buy. Why people were buying here? People were buying because of the expectation that the Federal Reserve soon will increase the interest rate. But the economic conditions are not solid. And they knew it. They knew it. So the Federal Reserve is just telling them, okay, if conditions improve, soon will improve. Then we have another bullish data, and the next thing we have another bearish data. It's just the roller coaster going on. Because of what? Let me show you something else. Here it is. The clock. The market has its own clock. And if we violate the clock, we are just fooling ourselves. You see the time now in London? It's 17:41. You can lie to yourself in London right now and say it's 12:41. But it's not 12:41 in London. is 12:41 in New York. This is about the market cycle and the market, okay, clock itself. Going back again to the market indicator, as I explained to you at the beginning of this video, this is not my strong point, but I find it very important at this point in time to bring this to the public so the market may understand what is taking place. Hopefully, we may have what we call an orderly market. At this point in time, the market is distorted, and my recommendation to traders is to trade cautiously, all right? Cautiously. Because at that one point, the market will correct itself. The market will correct itself. We can have what we call accumulation or distortion over time, all right? But we can delay, okay, the distortion, but we cannot, okay, we cannot change, okay, the market cycle. So the market is expecting more interest rates to go up in Great Britain, United Kingdom, okay, and also United States. But the Bank of England recently categorically said to the market that they are not prepared to put an interest rate. It looks to me that the market got a bit angry, apart from what I said to you about Scotland, which is another reason, another things, all right? The market got a bit upset. They say, okay, Mr. Canning, we're going to teach you a lesson, and we will sell the pound dollar until, okay, you start putting up the interest rate. If you are selling the pound, what are you doing? Okay, you're devaluing the pound, you create inflation, inflation going up. The Bank of England is forced, okay, to put up, okay, interest rate. So we see here, as you can see, this is on the weekly chart. How many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9. You just sell the pound. And what is said in the general media is that it's about the Scotland, but it's more to that because the market want interest rate to go up in London, okay? On the contrary, talking about the dollar yen, people are busy buying the dollar yen because they want to force the the Federal Reserve to put up interest rates. All right. The expectation is that okay, the dollar yen soon the Federal Reserve will put up the interest rate. Long-term investors start buying. But this is why I need to warn them, because why do we need to record this video on YouTube? All right, great platform. Okay, where we can talk. Ordinary traders like me can talk on YouTube. All right, I don't have to go to any public media before I can share my view. Okay, so the expectation is that the Federal Reserve will put up interest rate. But now, when should the Federal Reserve put up the interest rate? Let me check the time when I'm recording, how long we have been talking now, 27 minutes. Not too bad. So the Federal Reserve will put up interest rate if the global economy is recovering. Why? Because the Federal Reserve knew that if decisions are made locally, talking about United States alone, all right, alone, and the rest of the world is in a mess, it's just a bad decision, a useless decision. That's why they are careful. We can see more bullish data from the United States, but the Federal Reserve will be reluctant to make that decision. They may do it, or they may not do it soon, but at one point they will do it. But the best thing is that they do it at the right time if they care about, the global economy. All right? Same thing in Great Britain here. Mr. Carney, all right, the head of the Bank of England, is not prepared to put up interest rates because of the global economy. Decisions are not made locally alone. And, the market is waiting for the interest rate to go up in London and also in New York. But it's not happening. So the market is getting a bit agitated. Why? Why the market is getting a bit agitated? Because people are holding positions. There are people who are buying the dollar yen. These are people holding position for long term. If, for instance, ladies and gentlemen, conditions are not improving, talking about the global economy, and the Federal Reserve, is not putting up interest rates, what will happen to the dollar yen? Those who have bullish positions will have to close their positions. As I explained to you, like the way the recession has started in Japan, the recovery will start in Japan, and will spread to the United States, and will spread to Great Britain, and into the rest of the world. Before we close this video, ladies and gentlemen, The market is also expecting ECB to print more euro. It will happen. When? Good question. It will happen only if the dollar yen pull back. As the dollar yen pull back here, all right, the money flow, once again, will come out of the dollar. Okay, so money flow will come out of the dollar and we go into the euro first place. You understand? So all these people packing their money into the dollar will take it out. When they see the dollar coming down like this, they will take it out and they will put it in euro, all right, into the eurozone or other currency. Okay, this is as they move their money out of the dollar into other currency, especially the euro. We will see what the euro USD, which is the leading currency pair, should start going up. What is the euro USD? I'm looking for it now. The euro USD will start going up, which is normal. Okay, I'm looking for the euro USD. So talking about the money flow, before the ECB will start printing more money, we should see outflow of money out of the dollar into the euro. And at the point when everybody is out of the dollar, which means the dollar pulling back and retesting one of the key levels that I've already mentioned to you, then the ECB will start printing money. At that point in time, when the ECB start printing money, we will see again outflow of money, money out of the eurozone into the dollar. So the first scenario is that money is coming out of the dollar into the euro, and the next scenario, at the point when the dollar pull back to retest one of the key levels, we see again outflow of the money out of the eurozone into the dollar. This is when we will know that we have an orderly market. As things stand now, my friends, because you are my friend, that's why I'm sharing this with you. If you are an investor, you are a big institution, all right? You can disregard this and say, who are you to say this? But I can say whatever I like on YouTube, which is great. Remember this, okay? Remember this, okay? When we have an orderly market, most market participants are rewarded. And big institutions make big money, big profits. But when the market is distorted, we have what we call a distorted market, okay? No one is rewarded. No one. You can make money for a while, but once it usually takes place, you give everything back when the market is trying to rectify itself. Right now, as I was telling you, there are a lot of investors that put their money into the dollar, buying the dollar, which is great, but they need to be careful. Nothing wrong with that, okay? But some of them will give everything back or even losing more at the point where the market starts rectifying itself. So this is the euro dollar currency pair. Again, we're on the weekly chart. What we should have seen now, ladies and gentlemen, is for the dollar yen to start going down, okay, and the euro USD going up. I want to show you something before I close this video, and I want to show you this, okay, was he on a monthly chart at one point. This is, you see here, this is 2010, all right, and the euro went down price in 2010. You can see that at the midpoint of 2010 up to 2011, the euro was going up. During that time, I recorded many videos, and I was telling a lot of traders that this was a market manipulation in this session here. Okay, if you want a proof, I can send you some of this video. And I was telling you that this was a market manipulation. At this point in time, the euro, I was telling traders at that point in time that the euro must go to the level of 1200. Traders that are following us, remember that when the euro was going up in this session, I was telling them that the euro at one point will go to the level of 1200. That's exactly when the euro went. Here, you see, this low here, went to one here, okay, in the zone of 1266. But when the euro was going up in this session, I was telling traders that no, it shouldn't go down here. It shouldn't go up in this session. It should be going down more. All right. In fact, maybe probably we were here, if my recollection is correct. But people push it up, okay? They push it up, and the euro will end up. But because in this session here, as I was telling traders before, that the euro is distorted, everybody at that point in time, everybody want to buy the euro. Why? Because there was outflow of money out of the dollar zone into the euro zone. So people were taking the money out of the dollar into the euro. They thought that the market is not global, that, okay, everything is rosy in the eurozone, but it was not. As we come somewhere at one point at 2011, everything becomes clear, and quickly see how fast the price went down to retest the zone of 1200. The same thing is happening now. Instead of the euro going up, you see this session here, suppose this move here is completely wrong. The euro is supposed to go up like this in this session, this move here. It's a distortion. The euro is supposed to go up like this. But what's going through the mind of major market participants is that the ECB should start quantitative easing. Yes, it will. As we told traders few years ago, when the price was going up here, that the market is global because, okay, Japan went to a recession, United States went to a recession, Great Britain went to a recession. The euro at one point will start also quantitative easing. When the Federal Reserve and the Bank of England, okay, start printing money, okay, big time, all right, we were telling traders the ECB at one point also will start printing money. But it didn't happen when everybody was here. Now the market is saying ECB must print money. So they start selling because the expectation is that this is correct. Yes, the expectation is correct, but the timing is wrong. The expectation, the ECB must print money before the global economy will return to normal. All right, the ECB must print more euro. We will see again a devaluation of the euro. Note it down, okay? Note it down, okay? It's up to you. It's about the market cycle, the fractal pattern, okay? Without discounting, okay, the fundamental ratios. So, but before the ECB will start printing money, what should happen? Remember what I said to you before? Fundamental as solid, as sound, at the point where a bearish cycle is about to begin. So the market is expecting the ECB to print more euro, but the ECB cannot start printing the euro, okay, if the fundamentals, okay, are weak. They will start printing the euro when everybody thinks that the fundamentals are strong. This is what's happening, because once, remember this, you know, the time, so the price goes up like this, okay. If I do it like we do it in the Elliott way, so it goes up like this, 1, 2, 3, 4, 5, okay? Remember this. Okay, pay attention, okay? Let me explain this to you because you are my friend, so you understand it once and for all, okay? No financial instrument goes down like a rock. So before any financial instrument will go down, it must go up. Just remember that. Just remember that. Before a financial instrument will go down, it's very simple, okay? But just try to put into use. It must go up first. So the market is expecting the euro to go down, the ECB to start printing the euro, but the ECB will not print the euro if the euro is not up first. So as I was explaining to you, as we see the price going now from A to B, very often we see 1, 2, 3, 4, 5. The last part, which we call the fifth Elliott wave, is an up move in an uptrend, okay? So here the price goes up, and then from there it goes down. All right? It must go up before going down. He go up, go down, goes up, go down, goes up, go down. So for the ECB to print more euro, the euro must go up, which brings us here that this move here is a distortion. The euro should continue into the zone of 1500. That would be great place. So what is happening, this move from here to here, though the euro is going up, fooling everybody that the fundamentals are solid in the eurozone, but it's not that it was fooling people, it's just outflow of money from one area in the world into another area. But before the euro can go out from here to the level of 1500, the dollar yen must continue to go down. But the market is not prepared to do that. So they are busy buying the dollar yen and euro without any consideration to the distortion in the market cycle and the fractal and the global economy. Nothing at all. Crazy market right now. A market that is drunk, addicted to quantitative easing and putting guns on the central bank to put up interest rate at the wrong time and also at the wrong place. So the euro should go up now into the zone of 1500, all right, in normal condition, in an orderly market. At that point in time, the dollar yen should continue, okay, to go down into the key levels that we have mentioned to you. The minimum is a 9000 zone. As the dollar is going down, there will be outflow of currency out of the dollar zone into the euro zone, propelling the euro to the upside. And this is just what we call, this is a kind of adjustment. This adjustment must take place before the global economy will, will recover on a sound foundation. While the dollar is going down against the yen, what does it mean? It means that a recovery is slowly taking place, well, in Japan. Ladies and gentlemen, we can carry on with this discussion all day long, but I cannot, waste more of your time. We have been talking now for 41 minutes. This is my take on the Forex market. At this point in time, ladies and gentlemen, the market is distorted. And in this video, we have discussed that the dollar yen is a market indicator that we cannot discount like crude oil and gold. I have also mentioned to you what has happened in 2008, the financial crisis. All right, we talk about the global economy, that the market is global, okay? We have also talked about the interest rate, how the market is expecting the Federal Reserve and also the Bank of England to put up interest rates. We have also talked about, how major market participants, are trying to put gun on the head of the central bank, so to speak, all right? We have also talked about the fundamental ratio, cycle and fractal. I told you that the fundamental are sound at the point where a bearish cycle is about to begin, and fundamental are weak at the point when a bullish cycle is about to begin. This brings us again to the dollar yen. As I was showing you on the weekly chart, let's go to the weekly chart of the dollar yen. You see, what I was telling you, the fundamentals are weak at the point where a bullish cycle is about to begin. When the dollar yen finally, everybody get out of this drunkenness, when the dollar yen pull back here, the fundamentals are weak, and everybody thinks that is weak. That's where the third area wave for the dollar yen will begin. I hope you have learned something from this video also, and we put it to use to make excellent day trading, swing trading, and investment decision. This is my take on the Forex market. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. If you like this video, give us the thumbs up. If you dislike it, give us the thumbs down. If you have any comment, put it below. If you think what we have discussed here is very, very important to market participants, share it on Google+, on Facebook, and also on Twitter. Speak to you soon.